Morning, y'all. Today's market is split between two investors who no longer speak the same language. One camp builds portfolios around familiar ground, companies trading at price-to-earnings ratios between 15 and 30. Profits exist, cash flow pays the bills, growth comes slower but arrives on schedule. These investors accept boredom, they expect dividends, they expect cycles. They assume recession happen and recoveries follow. Risk is measured, valuation still matters. Their screens show manufacturers, banks, consumer staples, and insurers. They look for margins that hold up under stress. They ask one question first: what happens if growth stalls? The other camp lives elsewhere. They own companies trading at PE ratios north of 200. Some have thin profits. Some have none. All promise scale later. Their bet is speed. Win the market now, monetize later. Spend ahead of revenue. Build moats with capital instead of earnings. Artificial intelligence sits at the center of that trade. So does the belief that winners will absorb all demand. Valuation becomes secondary. Narrative becomes primary. These investors are not reckless. They're nervous. They know the math only works if growth never pauses. They know multiple compression alone can erase years of gains. They watch bond yields more closely than earnings reports. When rates rise, the future is discounted harder. When rates stall, hope returns. Their portfolios swing with policy language and capital spending plans. The tension between the two camps now defines the market. One group waits for prices to come back to earth. The other fears missing the next platform shift. Neither side feels safe. One worries about opportunity costs. The other worries about gravity. The divide explains recent behavior, why cash piles grow, why gold appears beside tech in the same portfolio, why rotation feels constant but conviction feels thin. It also explains volatility. When expectations are extreme, small disappointments hit hard. When optimism is crowded, exits narrow fast. Markets have lived through this before. Different sectors, same argument. How much future is worth paying for today? The answer is no longer shared. It splits portfolios in two. But until earnings and rates force a verdict, both investors will keep watching each other. Los Aves.